Hello. So, we are going to be talking about chapter 10 in our green book. And this is the chapter that we're going to talk about the new journal that is sales and accounts receivable. So, in chapter 9, we were introduced to two other journals. Oops. And then we were introduced to the purchases journal and the cash payments journal. So those source documents were P and C, right? P for purchases, C for check. So in this chapter, we're going to talk about sales. So sales is what we are going to do for our customers. So we are selling them merchandise. So we have, just like our vendors, we have a subsidiary ledger, an accounts receivable ledger, just for all of our customers. So we're going to assign them a subsidiary ledger with their name, their account number, and then we're going to add in any balance if we need to, like we did before. So there are a couple of new accounts that are introduced in this chapter, and one of those new accounts is sales tax payable. So unlike purchases, when we're purchasing merchandise to resell, we don't pay tax on that. But when we sell to the end user, the end user will pay sales tax. So just like when you go to Walmart, you go to buy a dollar candy. Here in Idaho, our sales tax is 6%. You're going to have to pay $1.06. Well, Walmart gets to keep $1. They take that 6 cents, they put it that they collect for sales tax, they put it in an account, and then at the end of each quarter, then they send the state of Idaho a check for the sales tax that they've collected. So when we're holding something for somebody else, we're creating an obligation, or we're collecting something from somebody else. We're creating an obligation to pay it later, which means we're creating a liability. So that's why the account is going to be a sales tax payable, because that payable signifies that it is going to be a liability. So just like we had in our accounts payable subsidiary ledger, we also have an accounts receivable subsidiary ledger, and we still are doing the same thing. We have a list of all of our customers with their numbers and their balances, and then the balance that we have in our ledger should match the balance we have in our accounts receivable controlling account. So that hasn't changed. We're still double checking. We're always verifying that our numbers are matching. That's what we do in accounting. So this is very similar to the vendor one that we did. This one, notice it says, instead of vendor, it says customer. So it has our customer on there. And so in this case, it's Skinner College. We assign them the customer number of 150. The date, item, post reference, all of that stuff is the same. The biggest difference here, guys, is just the balance. So notice this says debit balance. So it tells you that this is a normal debit balance. So because it only has the one. If we ever were to have a credit balance in these, that means our customers overpaid us, and we never want that to happen. So, and then of course we have our normal general ledger, that's why it's green, balance area that has our debit and credit. So, like I said, we talked about the sales tax, and we're going to be collecting that on the sales from our customers. So, this is our sales journal. So, obviously, it's very similar. It starts off with the page, has the date, where it says account debited. This is going to be the list of our customers. It has a spot for our sales invoice numbers, a spot for our post reference, our individual account numbers here when we post them and update them. Now it has our accounts receivable debit. So this is the column where we're going to have the overall total. So in our sales credit column, this is the amount of the actual sale before sales tax. Here's the amount of our sales tax, and then here's the amount that the customer owes us. So like our example that I just did with the dollar candy, right? Our sale is $1 because that's the amount of the candy. The 6 cents would be the sales tax. And then over here in accounts receivable, we would have $1.06. That shows how much our customer would owe us. Okay. So the sale itself was only $1. We collected 6 cents in sales tax, and then our customer would owe us $1.06. So here's our first invoice. So it has a couple pieces of information. Here is us. We are Three Green Products as our address. Here's who we sold to, Wells Apartments. We have a sales invoice. It has a number, a date, our customer number that we've assigned them. And then, of course, it has the terms we're going to give to our customers. So just like us, when we did our cash payments journal, our vendors would give us a discount if we paid early. We're going to provide that same opportunity to our customers. We're going to give them a 2% discount. That's where the 2 is. That's what the 2 is. If they pay within 10 days. So we're going to give them 2% off if they pay us within 10 days, or we're going to give them nothing if they pay within 30 days. So the net, it's going to be net 30. So if they don't pay us within 10 days, they just have to pay us the full amount with no discount. So down here, it tells us what they bought, the item number, description, the unit price. They have the individual line totals, and then they give us our subtotal. So the subtotal is going to be our sales, because this is the amount of the merchandise itself before taxes. So this is going to be our sales number. Here is our sales tax number, and then this is the amount that our customer is going to owe us. Okay, so sales, sales tax, accounts receivable, if you can remember that. So here is that transaction journalized. So on November 4th, which is the best day of the year, we sold merchandise on account to Wells Apartments, a total of $454.50 plus sales tax of $27.27 for a total of $481.77. Sales invoice number 498. So we have our date, we have who our customer is, we have our sales invoice number. Remember, that's always at the end. Here's our overall total. Here's the amount of the sale, and then here's the amount of our sales tax. Okay. On some of these, you might have to calculate the sales tax, and they'll have it in the instructions what the percentage is that you will need to calculate it. So posting, we're still going to post the individual accounts, and then we would post the column totals. So that hasn't changed. We're still posting individuals, and then we're posting column totals. All right, so this just shows how to update. We're going to do the same thing that we did for our customers as we did for our vendors. And you guys are all pros at our 5 steps of posting already. So once those individuals are posted, then we do the column totals. So then you would go to accounts receivable debit and post this total, sales credit, and sales tax. So instead of having to post each of these numbers individually into those accounts, we're going to post one total at the end of the month. So remember, individuals are posted weekly, totals are posted monthly. Just a reminder. So this just shows that posting process, and notice that we have those brackets. When we do MindTap, sometimes they will put the bracket in automatically. Sometimes you have to add it. You just have to pay attention to what it shows. So now we're into our cash receipts journal. So we receive money from our customers, But then we also have those cash and credit card transactions, just like we would, if you think about Walmart again, because that's what we have here in Mountain Home. So if you think about Walmart, you're going to go in and you're going to scan your items. You're going to put in your debit card or cash or your credit card. And so those are what are called point of sales. So when you go check out, you're going through a point of sale terminal. Okay. And that's what is going to give you your individual receipt. Well, your individual receipt is given to you. There's another receipt that is created and kept inside the machine. And so at the end of the day, those are what we call the terminal summaries. So it's going to be, we would know exactly, we can pull exactly how much each terminal, so each cash register sold in cash, credit cards, debit card, all of that. We'll be able to know exactly how much it was and by which type of payment in our terminal summary. So here's an example of what one of those looks like. And they're all different. This is just kind of a generic one, but it just kind of shows you how it would look broken up. So on the 4th, again, of course, it's the best day of the year. We sold $730 in Visa. So this was the amount of the sale, sales tax in total. We sold, it looks like 29 individual transactions in MasterCard, debit cards, cash, and then here's our total sales for the day. And notice this is just for the day. Okay. It's just for the day. So there were almost 300 transactions on that terminal. So this is our overall number. And all we really need to worry about is our overall number when we actually do our assignments. So we're going to be using, so this is, and I'm going to date myself here. So when I was in high school, I had a part-time job. And that part-time job was selling little trinkets. It was selling little statuarines of animals, kitties, dogs, and making NFL. I don't know why. NFL clocks. I worked at one of those like little kiosks in the mall. And at the end of every night, I would have to X and Z out on the cash register. So I would X out, and that would print out what was sold for the day. And then I would Z out. So I would just turn the key and turn to Z, and I would hit the button. And then it would print a whole list of the sales for the whole week. And so those sales would be what we consider now that batch report. So it would tell us how much we sold. So this is just our batch report just for our credit cards and the debit cards. So this does not involve cash, but we also had this on the terminal summary too. So this is what the cash, let me move myself off here so we can see the whole thing. This is what the cash receipts journal looks like. So obviously there's still a place for the page. If you put your hand over column number 3, 4, 5, 6, 7, it still looks like the general ledger. We have a date, account number, document, post reference, general debit, and credit. That right there is the general journal. Sorry, general ledger, general journal. Now, because we're dealing with a lot of payments from customers, we have a accounts receivable column. So remember, they only added columns that we would see over and over and over again, so we wouldn't have to do more than one line per transaction. So we see a lot of accounts receivables, we see a lot of sales credits, we see a lot of sales tax payable credits, sales discounts, and then of course our cash debit, which means we're getting cash. So these are the accounts that we would see in a lot of these transactions. So they gave us columns in order to keep us to one line per transaction to make it simpler. So on here, November 4th, we recorded cash and credit card sales of $6,280 plus sales tax of $376.80 for a total of $6,656.80. Terminal summary 35. So our terminal summary, we're going to use either T or TS as our source document. So before, we have purchases, it's a P, cash payments is a C, sales is an S. So this individual for our terminal summary is either a T or a TS. Just depends, Normally if we were to do it on paper, I would just have you do it a T. MindTap, I don't know because we haven't done this yet. It might ask for the TS. So just be aware of that. So we're going to put that transaction in the cash receipts journal. So here it is. So we have our date. And see this check mark here? The reason why there's a check mark here is because the three accounts that we're using all have their own columns. So these are going to be posted into these three columns. And so we have no individual account. So that's why there's a check mark. They use TS, so it's TS 35. That's our terminal summary. They put a check mark here in the post reference because there is no individual account to post, right? These are going to be posted at the end of the month when we post the totals of those columns. So we go over to cash or over to sales credit. This is the amount of the sale before sales tax. Here's our sales tax. And in the cash column, that's the amount that we collected, that total. All right. So that is a normal credit card cash sale. That's true. All right. So this one, we received cash on account. So remember, read those words, on account. Those are important because those are going to tell you that we're going to go to an accounts receivable. So we received cash on account from Edmonds Hospital. Looks like they're one of our customers. The total, it was $25,1680. Covering S448. Remember, that's extra information that just tells you where the original invoice was from. Receipt number 610. So R610, right? So here we are. Here is our thing. So we have our date, our customer name, R610. That's our document number. It goes into accounts receivable because remember, they're a customer, they're a vendor, they're paying on account. And then we have our cash. So this case we didn't offer, or they didn't take advantage of that discount that we would normally offer. So it was just a straight regular payment, no discount. So here's how you figure the discount. We're going to figure it out exactly like we did in the purchases. So you take the original amount of the invoice, in this case $14.50, multiply it by 2% or 0.02, and this is the amount of the discount, and then that is subtracted from the original invoice to see what the customer actually is going to pay. So here it is. So we have the 5th. Our customer received cash on account, again, so that tells you accounts receivable. Palmer Dentistry, $1,421, covering sales invoice $462. Remember, that's extra information. It just tells you the original invoice number. The original amount was $14.50. That's important. If we don't use the original amount, when we go to record it and we go to update their account, it'll say that they still owe us $29. And they don't because we gave them a discount. So we have to use the original amount. And then we're going to put in the discount, how much we gave them, that 2%, and then we write down how much they actually paid us, so how much we actually received. Okay, so cash receipts means cash received. If you can remember that, you will be fine. So posting, we post our individuals first, always individuals first, and then we would post our totals for our columns. So individuals are posted weekly, columns are posted monthly. And our general debit and credit will not have any numbers in there because those are all of our individuals. So those will be posted individually. So this just shows those same 5 steps of posting that have not changed. Notice it says accounts receivable credit. It's got a normal debit balance, so notice it's subtracted. Okay. And this just shows how we would total, prove, and rule our journal. So we have our single rule that shows the next number is going to be our totals. We have our totals of all of our columns, and we just add them. We add all of our credits together. We add our debits together to make sure that they equal. And then once they equal, we double underline. So the last step that we do is proving cash at the end of the month. So in our cash ledger, we have our beginning cash for the month. Notice it tells you right where you get it, November 1st balance of general ledger cash account. Now, then we take the total of cash received during the month. So look at this number. That same number is right here. That same number is right there. So we take that cash received, we add those two together, and then this is the cash credit total on the cash payments journal. So this is how much cash we paid during the month, and then this is how much cash we have on hand in our cash account, and then that should match what we have in our check stub. If those two do not match, then we have a mistake somewhere that we need to go back and fix. So we just double check and make sure all of our accounts are correct, all of our postings are correct. We go here to make sure that we didn't miss any checks or anything like that. So posting our totals, we take, this is CR11, so we would use that as instead of we did CP10 or whatever it was, or CP11, we would do CR because it's cash receipts. We do use our page number. We're going to do the column total, and we're going to update the account balance. So this is a credit, this is normally a debit, so notice they're subtracted. And then we would put the number underneath. And we would do that for all of our accounts. So we would post individuals, and then we would come down here and post these column totals. So once everything is updated at the end of the month, we have our completed accounts receivable ledger. That means that all of our customers' accounts have been updated over the last month. We're going to create that schedule of accounts receivable. Just like we did the schedule of accounts payable, it's the who, the what, the when at the top. It has a list of all of our clients here, all of our customers, and then their overall amount that they owe. And remember, this overall amount that they owe should match what we have in our general ledger for accounts receivable. All right, guys, so that is what we're going to be covering this this chapter in our book. All right, have a great day.